All right. Mic check. You guys should be able to hear me. Good. Let's get into this. All right. You guys can hear me and you can see me. What's going on? We are back. Drinking my water juice here. Put it right over here. So what a week. How's everybody doing? Happy Friday, TGIF. We're going to get right into this one, guys. I'm going to try to go through a couple key critical things that are going on in the mining space and in crypto in general. I've been blasted. We've been out of town over at Merkle up in Washington State. We got a lot of good content coming for you guys on that. We're just now getting through some of the video. We had taken almost 100 gigabytes of 4K video out there at Merkle's site, had worked to help them with a couple things, and just got to see a Hydro S19 implementation. It's the second implementation in the US. And there was a lot that was learned there and a lot that we've picked up on some best practices and things that we're going to try to help anybody else trying to go through that implementation that is coming up. So you're going to want to see some of that content. If you're not following us on Twitter, all of that stuff was out there and you guys can see some of that content that's coming your way related to that kind of implementation. Also, there were some GPUs there and we'll talk to that here in a minute. But we're going to cover today kind of what's going on. Ethereum has set a target terminal difficulty, which just is a way for them to target when the release and the merge essentially is going to happen, which right now is looking at September 15th of this next month. Pending, I would assume, if anything else doesn't come up, that there's a critical issue, but it looks like it doesn't matter. They're going to YOLO no matter what. I have obvious concerns on this. We're going to cover some of that today in this. It's hard to try to communicate the risk and the concerns without immediately having this basic interpretation that I'm going to be coming from a miner's hat on it, and they're going to be like, it doesn't matter. He's a miner. Anything that he says is BS. But the realities are we've been, not just a long-time miner, but a participant in the Ethereum ecosystem for quite a long time. An Ethereum supporter on that. Ethereum project supporter on different things. Went out to TruffleCon and talked, which is like the IDE suite. So I've had experience with, Ganache and some of the tools that are used in the Ethereum IDE standpoint. So I do have an appreciation for the development side of it. We've tried to educate people in that. We have educated people from a smart contract standpoint. We've looked at audits on smart contracts that have been produced and just look at, some of the existential risks with stuff, and provided this on the channel for years, since the beginning, since the release of Ethereum. We've been here with Ethereum. So that would be the one thing if you're, an Ethereum proof of stake person and you find this video, to understand that history that's there. We've obviously had some resistance when it comes to certain things that impact miners. When there's not a predefined schedule with something like a issuance reduction, and then it's guised in a fact of, hey, this is good for holders and that kind of thing, as we've seen every time that the reduction has not necessarily had an immediate effect or any what people think, right? The price of Ethereum is still lower than when 1559 kicked off, right? Which created a large burn on Ethereum. It's essentially not recovered from that point, right? It kind of like was a buying of the news, a sell of the event, and has been that way since. There's a lot of this perpetuation of the price going up now again. There's a lot of the buying of the news of the merge. And from a technical standpoint, I still have a large amount of concerns, not because of the testing that has been done with all of the different test nets, and showing that the merge can mechanically happen. I'm concerned with the lack of testing that I've not seen on a lot of the application layer, the execution layer, and how it will handle why people say it shouldn't have any kind of effect on it. We all know how that works, right? There are specific issues that can occur if a network acettation breaks, or we have reorgs, which is what's happening on the current test nets, and why it's being completely passed over, saying, hey, the reorgs happen all the time on proof of work networks as you get orphan blocks. If like you have a race condition and then there's like, oh, we thought this was the correct block, but another person had found a block at the same time, and then it loses out and orphans out those shares. And then you end up having, a longer canonical chain with, somebody else that won a block, and you'll have like maybe 1-2 block reorg. It's went 7 to 10 blocks on a reorg on the test net, which is a little it's a different thing. Most places give enough time, and I think all it does is they'll just change the dial on like an exchange, or if you're receiving money from somebody point to point, it may look like it's in your wallet, but then you just get a behavior to say, hey, let's give it 15 minutes because we want to make sure we don't get reorged. Maybe that's the state that it ends up turning into. Who knows? But there are technical things that I'm concerned with, but I think they're going to YOLO no matter what. And it is what it is. I mean, I think right now Ethereum has made the Ethereum Foundation and developers and node providers, and with the large participants that are on there, exchanges have announced they're okay with this merge. They're going to accept it. And what that means is they're also accepting the risk that comes with things may go wrong on that day. And that's the stuff that I want to talk about, is how it's going to be handled and what's the messaging. I don't want them to fail on this, right? We have ETH. We still have ETH. And I believe in the development ecosystem around ETH. I have reservations, as you guys have said, or have seen a lot of times, on some of the decisions that are made, because I think they're being made for the wrong reasons. But I also understand, being a developer before for a long time of my life, I understand the pressure from the community and from other people to kind of just press, and sometimes you won't ever get there unless you try it. So I'm trying to give them some benefit of the doubt. However, there's a huge distinct difference between an application that does that, or some product or service that does that has, a nascent group of people around that product, and they just kind of accept the fact that the UI breaks or something happens, and we kind of just work through it. If you think about anything in life, things happen sometimes, and you're like, I bought this thing and spent money and now it doesn't work, and that sucks. And then maybe an update comes and fixes it. And we just accept the fact that we're living in a beta type of world. It's a very distinct difference if that thing happens to be like your life savings. Like if the bank is like, oops, there's a sub account in your savings that just doesn't work anymore, and sorry, you're out, right? That's a different type of, it hits different, as I would like to say. So that's the kind of stuff that there's certain things that have to be perfect and have to be right with that. And I think the approach and the way it's being done is they're looking at it from a protocol standpoint only, and not necessarily the application, saying that we're not taking on the weight of the applications. That's on the applications to make sure they work. And I think it's a little more symbiotic than that, but they're going to YOLO. So we're going to see what happens after September 15th. And then, Ethereum moves over to proof of stake. Now, what does that do moving forward for people that are mining? And that's where the main part of my focus is going to adjust to. There's been a few attempts to try to get folks to look at that. I mean, I had a video a few weeks back, actually about a month and a half ago, where I was kind of explaining the way a timeline works and development and how it could shift based on a set of, critical issues that become showstoppers, and you have to fix them. There's a few critical showstoppers that I would not feel comfortable with if I was in Tim's shoes, to say less press. I would want to investigate it a little more. There's 2 Cornell issues that were brought up from the college. Cornell had brought up a couple of issues with attack vectors on the current proof of stake implementation that Ethereum has. They're kind of accepting that risk and moving on. There's been obviously the reorg stuff that they're accepting that risk and moving on. So now it's a matter of, cool, you guys are going to do that. Why you're trying to figure out that science project? What are the miners going to do? What are we going to move over to? And the attempts that I've had a few times with you guys on models is I don't want to say it's a linear kind of thing, but in the reality is what can take on the size of your farm based on your price rate that you pay for your power, and can you continue to mine or not? Right now, the chain that has the most opportunity to take the hash rate, as we've said since last year, is Ethereum Classic. It's the least amount of configuration change for every miner out there. It's essentially switching things from ETH to ETC. And sometimes you have to update a port, but other than that, it's pretty much the same kind of config and setup. And just looking at ETC's hash rate right now, and ETC's been pumping a little bit like everything else, but Ethereum Classic hash rate, the current hash rate model, it's at 29 terahash. It was about 25 terahash a few weeks back, and then it had a nice little price increase. But the majority of hash rate is still on Ethereum because it is by far the most profitable. Actually, it's at 31 terahash right now is what I'm reading from 2 miners as an example. And where does it go from there? So we've done the math a few times with you guys. Ethereum Classic, 3 coins per block every roughly 15 seconds. Ethereum's about 2 coins per block every 15 seconds. 33% increase in total yield. There's a few other network effects that I want to talk to today with Ethereum Classic, and then we'll get into some of the other coins. Ethereum Classic's on a majority of the exchanges, and Ethereum Classic also has the 51% protection that they put in the Thanos update in 2019, November of 2019. If you're curious, if you've never really been tracking, or you found this video and you're just like, well, didn't Ethereum Classic used to have some double spend issues? It did. And they addressed it with multiple exponential subjective scoring, which is a functionality that it now aims to protect a 51% attack. So it's a very relevant risk with Ethereum being at 860 terahash right now and Ethereum Classic being at 31. It would not take much to 51% attack Ethereum Classic if it did not have this functionality built into it. Because as that hash rate switches over, a single extremely large farm could have more than quadruple that Ethereum Classic terahash, right? So that feature sort of supports it where the target difficulty has to be up to over 37%, unless it's been changed since I last read it. 37% times whatever that target difficulty is. So times 10 would be around 300 terahash. So it's well within spec. If we were setting at like 3 petahash of Ethereum, then Ethereum Classic could have been at risk, because then we show the potential being about 3.5 terahash, and that would be around that 37 times that would be required. But that's if everybody colluded, single pool, that kind of thing. So Ethereum Classic absorbing the hash rate, at the moment that Ethereum does the proof of work switch over, it's going to be interesting to see how quick farms switch over. I'm not saying some are on autopilot, but we've seen this with many other coins when like Monero had forked and Ravencoin had forked, where people kept mining the chain and didn't switch. So there will be a lag, when this happens. It also will be very interesting just before Ethereum clicks over. The target difficulty that Ethereum is set to is predicated on the hash rate that's on the network. So if hash rate starts falling off of Ethereum's network, it actually will push that date. Now, I've seen some people come out and say, well, why don't all the miners just turn off or just start switching now? And for incentive reasons, most people wouldn't do that because they still got to pay their power. And unless they just power completely off in some kind of protest. But Ethereum, they set the target difficulty. They could just turn right around and set it again, right? So if miners were playing any kind of games with it, they would just come in and just say, okay, you guys are playing games, and set a 58 quadrillion, or whatever that target difficulty is. It's a lot more zeros than quadrillion, but they would just come in there and say, well, now it's 460,000, quadrillion. So they can adjust it. So it's actually irrelevant. They were just trying to give, I would assume, some time to do some discovery to make sure. And this is part of that. You kind of put on any kind of project schedule, you put a plan in place. And that plan right now is September 15th with that target difficulty predicated on those hashes. As they start to see that trend start to slip to the right, because people may start to transition over earlier. And if the hash rate on Ethereum comes down, that date's going to the right. So I can't imagine them sitting there playing with the dial if they're trying to target September 15th, but just there's an option there where they could go and set that. It will have some effect on other people, but that they ultimately obviously have reign of control, or at least reign of the messaging and enough following of that messaging to essentially assume the target control over the network to make that transition. I'm not going to get into the issues of like, oh, is that centralized or this or that. There's so many different culture and sociology kind of things going into this that I'm just not even going to go there. I mean, there's a lot of other bigger fish to fry right now in the space, which I think is around privacy, and that's where I'd like to more stick some effort towards than trying to worry if Ethereum's centralized or not. I mean, I think everybody knows that answer. It tries to be decentralized, but its basis is from a very central controlled development path. It's been that way for years. A lot of these changes have been projected, and then which creates a quorum to then change it, which is some aspects being centralized, some things being federated, right? They've gotten enough people to make change on it to where it's kind of like a federation when it comes to making changes to the Ethereum network. And that's what allows Ethereum to start hard forking. I mean, there's a whole philosophy if that's good or bad, right? Sometimes you need to make changes on something, and if you're trying to be agile in that, you're going to have some reign of control. So I'm not going to debate on which side of it is. It is what it is. For Ethereum has made that choice. So other networks, other than let me stay on Ethereum Classic for a second. So Ethereum Classic, why? People are like, why Ethereum Classic? Maybe you've had some issues with Ethereum Classic. Maybe you had some double spend issues that affected you, and you don't have trust in Ethereum Classic. It's the least line of resistance. It's the least line of resistance for miners. It's the least line of resistance for configuration. It also has the potential of all of that knowledge and development under Solidity, Rust, Python, implementation strategies on layer 1. When we talk clients, we're talking Geth. Those teams and that development effort can very quickly transition over to Ethereum Classic if they wanted to continue to work on layer 1 things that are related to the origination of the way ETH came around. So you have this entire ecosystem of development that can quickly change over. Also, the adaptation of existing implementations on Ethereum can quickly move over. Smart contract tech, all that can go onto Ethereum Classic. When we look at the potential of growth on Ethereum Classic, if it's a NFT market, that kind of stuff, and with Ethereum Classic, and I have an article below in the description that is Bob Silwell, that's part of the Ethereum Classic Cooperative, that's kind of like the ETH Foundation, just light, as it were, of discussing, the challenge between ETH POW, the implementations that are trying to come out to keep the current ETH1 chain moving on, and their challenge to that to show the technical debt that any fork on the proof of work side for a current Ethereum has an order of magnitude more complexity than Ethereum Classic, because Ethereum Classic, when it had, kept the chain going and Ethereum forked off to change the DAO and ultimately maintain the Ethereum naming and chain ID, Ethereum Classic was pre-DeFi. It was pre-Ether Delta. It was pre the emergence of Uniswap and all that. It was pre all the NFT architecture. It was pre all the liquidity pool and curve finance and all that kind of stuff, right? So it doesn't have all of those smart contracts as part of its chain history, which makes it an EVM that has the purity of the origination prior to all that, and doesn't have all of those things just setting out there. So an implementation of DAI, an implementation of some of these other smart contracts are more fresh. It's a fresh implementation, meaning people can fork that over, have new private keys associated to that, to where if the Ethereum current proof of work was to continue on through a fork, which is part of what's being pitched out there by I think it's Chandler Yao, was that they would just keep it on there, take out the difficulty bomb, but there's all of this code bloat essentially sitting on that chain, that those other participants let's say, got any sort of inertia. There's some security risk by them having to go affect the other side of that chain. So if they were to go onto ETH proof of work saying, okay, you've duplicated everything, now they're having to access those private keys. It's like the same risk you take like on Bitcoin if somebody forks it off to Bitcoin, whatever, Diamond, all this other stuff. You're using your same private key to access your coins on there. And if there's some malicious software that's been now created for that implementation, you're now risking your primary implementation of that, right? So this is, I think, is a clear advantage on Ethereum Classic versus any kind of implementation of any proof of work extending the current Ethereum chain, because you're going to have all this other stuff that people that want to, if they were going to support it, are going to have to expose those keys. There's also risk of like replay attack potentials with that, because they are so close and they're the same private key side, that you now have other implementation risk. So I just don't see the ETH proof of work without an extensive amount of development support to even be sustained. It's clearly, even if it was an ideology, standpoint, there's a significant code bloat that they're going to have to address. Or you're just going to carry it, and let's say nobody ever calls those contracts because the originators are not doing anything with them. There's not all that other support on there, to where if you have something like Ethereum Classic and somebody decides to deploy there, it's more directed with intention, has support for that particular implementation. And then the attachment to like the cross chaining and the the bridge support on like an exchange, let's say the ETC to DAI on the ETC side, and then DAI to ETH side, has a much more cleaner connection than ETH proof of work to DAI, which actually is the same DAI account on this side. And now that you have to get that provider to use the same, MakerDAO to go in there and use their private keys to now access the proof of work side. It's just, there's a lot more risk. Let's just say that. And I'm trying not to stay out of the philosophical, should you or not, or whatever. I'm just looking at it mechanically. It just looks like it's more risk. So Ethereum Classic has a lot more advantage there because as those things are implemented. You also have a couple other factors on ETC with the fact of ETC has done just like Ethereum, is a layer 1 protocol that has so much throughput. So let's say there's some inertia because of this merge. Let's say Ethereum has maybe some issues with its proof of stake implementation, which it'll work through in however many cycles and hard forks that it needs to fix it. But let's say that disenchants some people. They want to still have functionality. And let's say an ecosystem starts to grow around Ethereum Classic because people have a little more confidence in proof of work again, where it's 3 coins per block. There's also a potential that the blocks get filled up, and then we end up having the same kind of expansion and larger fees, where you might end up having 4, 5, 10 coin ETC blocks at whatever price. If the ETC, let's say, goes to $100, and now instead of 3 coins per block, you're getting 4 to 10 because people are YOLOing into whatever the next Bored Apes Yacht Club thing that's on ETC. Let's say it gets that level of inertia. That's like an X factor on yield, right? And then what you'll have is this curve that's going to go straight up because it's going to allow more participation. And if you look at it, that's the same history kind of that's repeating with ETH, where only so many people were able to participate ahead of, the DeFi jump, right? And March of 2020, we're down to $86 ETH price, and it went down to 151 terahash. There is a real reality that with ETH Classic hitting some of those numbers, that if it had a higher yield, you would have a lot more participation. So there's just, and it's a layer 1 thing. There's no, Polygon on that side right now. There's no L2 real infrastructure there yet. And I think people are, well, why would everybody ever do that? At the end of the day, it all comes back down to incentive. Ethereum Classic starts to get enough movement and participation, it will have the momentum to bring those other projects over to it. So that I've been selling it pretty hard, not trying to sell it, just talking reality. We actually don't have a huge, like, quote unquote bag of Ethereum Classic. I've mined it for a bit, but it's not near the investments that we've had on Ethereum. So just in full transparency on that. Same thing with Ravencoin. I haven't talked about Ravencoin much about it. I have a lot of love and respect for what Ravencoin does from a UTXO standpoint. It's a different type of network. Ethereum and Ethereum Classic is an EVM-based network. It's a very application-rich network where you can put applications as smart contracts, attach, Node.js front ends to it, and have a very application-rich environment. Where Ravencoin was based on the Bitcoin blockchain and is a UTXO model, which is like unspent transactions. It's like splitting a $20 bill and you're paying for something that's $11, you get $9 back. There's transaction splits on all of that activity. With that, Ravencoin has added the ability for you to have a lot more data attached to those transactions. You have asset layers. You have, there is burning that's part of it whenever you're creating new assets. And you have IPFS integration, which allows a more tighter coupling within that you would do on the EVM for like Ethereum, as an example. So it's a leaner implementation, from a technology standpoint, it's a leaner implementation on like Ravencoin's network than Ethereum. And I think that will start to become more prevalent when when more development comes around on it and sees, like, I have this complex smart contract thing that has to be third-party audited. There's all this signing activity that you have to do through MetaMask to post your NFTs, have a trade thing, or you can do everything in a single transaction on Ravencoin to do the same thing. And it's tied directly to the single transaction. It's just a different implementation. But from a mining aspect, let's click to the mining aspect, it limits. If somebody doesn't have a lot of knowledge and wants to mine and just starts mining, you're going to see that the card that you're using, the GPUs that you're using, is using more energy and they produce more heat. However, there are things that you can do to lessen that. And while you're not getting the full quote unquote potential of your GPU, let's say it does, I love using the RX 470 4 gigs as an example. let's say, or an 8 gig, and you have that on there, it could do 12.5 mega hash on Ravencoin, but you're going to use about 140 watts of power, and it's going to get hot. Or you can have it doing about 8.5, and you can have it using the same exact amount of power and heat profile as you do on Ethereum or Ethereum Classic. So it all comes down to how you throttle it and what makes sense. And at the end of the day, it's an efficiency equation to figure out. And that's part and parcel of what all these other channels like ours do to help you guys understand, hey, this GPU, this model number, this, heating pad, cooling pads on the cards, these pads need to be replaced. That kind of stuff that we cover helps you get your hardware to where it can handle that kind of stuff. And then your configuration that probably makes sense for heat dissipation, that kind of stuff. So Ravencoin by design is more task intensive. It both hits memory and the core. And that was to disenchant any ASIC development, anything that was application specific integrated circuits, things that are designed to do those tasks, which lessen the ability for people to participate because the hardware's harder to get and it's usually more expensive. Where a GPU, anybody can just go to a store, especially now, and go get a GPU and participate. If you just found this video and you're like, what the hell is this guy talking about? You literally could find this video and go to one of our other videos on how to start mining. And in the same day, in the same sitting day, learn how to do that, get it loaded, start mining, wake up the next morning and have coins in your wallet. And that's very liberating for a lot of people. And it doesn't matter where you're at in the world to do that. So that's one of the most important on-ramps, I believe, in this space, is why mining is a key on-ramp to get people participating. It's not having to go out and KYC yourself to some exchange or go through an approval process. It is the leanest way to get cryptocurrency, in my opinion, if you already own some hardware. And it gets you engaged into that community. It is literally the on-ramp. It's what got a lot of people into this space, and it's forgotten a lot, especially from people that didn't come in through the mining aspects of things. So, Ravencoin's out there. And the other reason why you see Ethereum Classic and Ravencoin is like the two top coins is really comes down to the liquidity centers. This is always lost, I think, on some of that discussion, is the fact that those two coins are on some key large entities, right? So Binance has Ravencoin on it. When we talk Ergo and Flux and Grin and Firo and Beam and some of these other coins, they're not on those exchanges. For whatever reason, most of the time it has to do with the levels of participation and interest. There's still quite a bit of network activity that happens on Ravencoin. Sometimes some of these other coins have spikes where they'll have a more daily volume. But by and large, Ravencoin has a lot more volume. And the issuance amount being linked to the same code base as Bitcoin has just 3 more digits added to it. So instead of 21 million, it's 21 billion. And it's under the same schedule of of reducing the inflation through halvings, right? So Ravencoin had a halving this year, went from 5,000 coins every 1 minute to 2,500 coins every 1 minute. So the price discovery doesn't have to get far for it to be notionally as profitable as something like Ethereum or Ethereum Classic. Its network difficulty is around 2.6 terahash right now, with its peak being at 11 when it was around 27 cents a year ago. So it went as high as 27 cents, is about 4 cents right now. So its price discovery going up allows it to quickly participate. But I would say and caution everybody that just tries to YOLO into mining Ravencoin, you just got to work on your configs to make sure your equipment stays, from overheating. So those are the kind of, when we're looking, that's what we're looking at. So I have in here, what's the BBT team doing? That's what we're looking at, making sure our configs and things are good for Ravencoin and Ethereum Classic. Those are the two that we're looking at. I also have looked and covered a handful of the other coins that you can still mine with GPUs. Ergo, Cortex, Grin, Firo, Beam, Zencash, Expanse, Metaverse. These are other coins that are out there, but they just don't have a lot of liquidity behind them. And especially for larger farms or mid-sized farms, if you have, a couple hundred GPUs or something like that, and you need to pay for your power, you got to really look at that daily volatility. Are you going to move the price when you're trying to reclaim enough to pay for your power type of thing? So that's some of the main impacts from just a direct price and to your power ratio. But then you also look at those secondary network effects that can happen from the development communities moving over. Again, hopefully that gets you guys there. I want to take a pause real quick. And make sure, hopefully you guys can still, we haven't had any eruptions on this stream or anything, right? It's still going. It looks like everything's still going. I'm gonna do a stream check real quick because I've been going for a bit. I think if those other coins can get added to those, I would be more comfortable with them. I don't know a lot about them. I need to do some more research. I know a lot of folks have talked about Flux and parallel assets and some of the other features that are on there. It's interesting. I still have some reservation on the way the structures are, and some of the dev fee stuff was structured. And then same thing with like Yeargo. But I'm not completely, I mean, there's other coins. There's a Feathercoin and Vertcoin and some of these older coins that were, Feathercoin was something I was mining back in 2013, to give you an idea. 2013, 2014 timeframe. And it just never really took off and didn't have that development. It was a UTXO model. Same thing with Vertcoin, UTXO model. And they just didn't really get the inertia and the liquidity behind them. But some of the innovation that, Ethereum Classic having probably the most distinct advantage, and then Ravencoin having a strong second, really is where it's at. And that's the current stack right there. Who knows? The interesting thing about change is the also concept of what the next opportunities come from, where people see the amount of hash rate that was out there and look at that potential set of participants, and an ecosystem can be built around stuff. So maybe some of the Ethereum developers that don't have much to do left on protocol development move over to some of these. So I'd be looking at that as like, they're the lifeblood of the development efforts, and seeing some development talent move over to some of these other networks could make things very interesting. So I'm looking forward to that. All right, my dudes. So let's quickly switch over to the other aspect of what's going on in this space. Sorry for the blank screen. I didn't know if I was going to draw anything in the background, and we might do that maybe with this next conversation with Tornado Cash. So there's a very unfortunate set of things going on right now, I think, in this space when it comes to privacy. It concerns me as being a solution architect and working in both the commercial supply chain space and working in around the DoD space in my life. It concerns me on the privacy stuff that's going on, especially around Tornado Cash. And it isn't that anything obviously against anything that OFAC's trying to prevent when it comes to malicious actors or sanctioned actors using a service. I think it goes without question that if somebody is trying to harm somebody else and has had a history of harming other people, and their use of certain tools, typically it's around the person, not the particular tool. If somebody uses a phone line to create something very bad, or a secure socket layer connection, or a VPN, you don't see the VPN companies getting shut down. Some that were not complying with certain activities. But in a decentralized world, like where you have a smart contract and you have an open source development, there's some concern. Now, the developer that got recently arrested, I think as of yesterday or today, might have been today. I always like to hold judgment until I've seen what the case is. If the person that was involved in this, the 29-year-old that's from Netherlands, that's been the developer, it's on the grounds of only creating this smart contract, then I think that there's going to be a huge defense for him, right? because it's not just about what his acts are, it's about what everybody has to deal with in privacy. And I think it's a bad move if it's purely a developer writing code. We should stand up completely against anything that is preventing people to write open source software for privacy. Period. End of story. That's a bad environment for any, and I think that and that's me saying that from the grounds of writing large systems that commercial and government have used. So you have to have privacy. You have to have privacy of certain things. We have privacy throughout our whole lives. Every time we log into our bank accounts, SSL, OpenSSL, SFTP, which is a secure file transfer. These are foundational functions in society that have a whole range of reasons why you want to secure those transactions. Any open source development in that space is how that stuff gets stronger, and that should be preserved under all cost. So what I would assume, and this would be my speculation of it, is that there's probably more to the story. It's a difference if you are writing code and you're trying to write something like a security. I mean, there's the Zcash Foundation. There's groups that are improving ZK snarks, the ZK technology, zero knowledge proof stuff. That is critical development on improving that boundary layer that you have in a lot of just entities that rely on getting better at security. And by going after a developer is a terrible move, because you're setting the wrong precedents and message where you're gonna go into the dark ages with things. So if the Justice Department or whoever's putting out that capture request, the writing of that software and then the helping of a particular entity and the use of it, completely different things. So what I would say is, it sucks to have to go through that. This person that's going through that, I'd want to see what are the grounds. At some point, that stuff's going to come out of why and what they're targeting. And if the messaging is, we're not attacking the open source nature of the software, but we are attacking the fact that somebody reached out to them that is a nefarious actor or a state actor somewhere, and he helped them in some way. The unfortunate thing about OFAC is, and I have a link down below for Peter Van Valkenburg, that is with Coin Center, explains this very well. I have the link. I highly recommend, if this interests you in any way, watch it on 1.5 speed, listen to it. It's about 20 minutes of him talking that explains this in far better ways than I can, from a legal aspect as a lawyer, him being a lawyer, that I would listen to. But it is the facts of the way the structure works when it comes to like OFAC and compliance. And there's not a lot of wiggle room with that, right? It is essentially, if you get on that list, you do not, if you're in the United States, you do not interact with that. It's not something to joke around, or because it implicates you immediately. Now that they've tagged that. Now going forward, is that going to get brought into some kind of legislation, and somebody can fight, hey, maybe you didn't understand the nuance of a smart contract. There is no entity. You're literally you're literally putting this thing on code, and now you're going to have like whack-a-mole on a level that you've never seen before, because people are just going to have all kinds of different implementations with different names. And then it's going to be this, you're never going to catch it. It's going to make the war on drugs look like child's play, right? Is what I'm saying. Like, this technology has the agility and the perseverance to win that ultimate argument, right? And that's the whole point, is that it's been, blockchain technology in general is cool AF, and creates this concept, and this, not just a concept, but an implementation that makes it truly decentralized in certain aspects, right? For them to then try to change those smart contract addresses would be like hard fork. So essentially, for the governments to try to implement a change of, like, let's say they wanted to delete that smart contract, you would have to somehow convince the world that things would be tightened up so tight that you have to hard fork it like the Dow fork, right? And then it's just like an Etch-a-Sketch and it never occurred. I just don't see that happening, right? And that's not a world we want to be in. Like, that's terrible. Like, don't to attack that, it's attacking the foundation of what everything is on this space. So I think part of this is education, and part of this is kind of coming to the table of trying to make sure bad actors have a disincentive. But if you're attacking the foundation of what makes things private, that's terrible. Like, that's not good for anybody. That's actually terrible for the government. It's terrible for everybody, because then if you push, I mean, literally, we have a BBT, Jason, a few of the other folks from here. We had to go to Black Hat this year, right? So they were at Black Hat just this week, right? Black Hat in Vegas was going through it. So to have the concept of this, hackathons and cyber awareness and all this other stuff, but then turn right around and then attack like foundational open source development is just, it's a miss. People make mistakes. And I'm not saying the developer. I'm saying sometimes the government can make mistakes. Sometimes people don't have maybe the knowledge to make that decision. Or more information will come to light, which is the most probable aspect that is going to question maybe some of that. Maybe he just made the wrong friends on something and didn't understand the implications of helping somebody. And there is that too. There's some risk in there. Virgil, I can't think of his last name. That's part of the Ethereum development folks that went to North Korea to teach them blockchain technology. Like Ethereum is sitting in jail for it right now, because it's like those are folks that at least if you're a U.S. citizen have been deemed that you don't go have a conversation with unless you're Dennis Rodman somehow. But like there's teaching technologies to sanctioned areas are not good. So I would think that I'm reserving some judgment until more comes out. But I'm also trying to put the message out that attack on open source development is terrible. It's not good for anybody, including the government. And I would hope that more clarity will come out of why, or a run back or a step back of like, hey, now that we understand this better, probably not the best move. And they make some resentment on understanding the delineation of a deployed smart contract that has no direct private key access. It's essentially that address key is burned and it's implemented, and there's nothing to change on that. So it just changes the strategy. So I think this is kind of an old world strategy meeting the new world Web3, and there's some I'd call it collateral damage in the middle of that, and we need to have that kind of explored. So I think what they're doing right now is what is going to help uncover some of that, and hopefully we get some answers in general, because it does concern me as a developer, as a leader of developers throughout my life, and seeing the passion that people have, especially in the security realm. I don't think it's at face value, it looks bad. And, I hope that cooler heads prevail, because I think everybody understands the intention that, you're not wanting to support, bad people that are trying to do folks harm. But I think that's it. So I'm going to take some questions and then we're going to wrap this one up, because we got a whole bunch of other stuff to get to you guys. If you guys want, let's see, we got 339 people in here right now. I had the laptop up. I was going to show you guys and kind of talk through a few things that we had went out to the Merkle mine. So that it's the second implementation of the hydros. So it's ASICs, and then there was a whole bunch of GPUs too. But I was going to take you guys through just a couple quick videos and kind of let you guys see some of the stuff on stream, and then we're going to put these into a video and put some context behind them. But if you guys wanted to see that for a second, we could spend about 5 minutes on that while you guys are thinking of questions. Somebody goes, please explain ZK snarks and rollups, please. That's like its own video, but there is this basic concept that you can through math, you can verify that something occurred and it's correct. And it's like it goes into this bag, like you have an input and you have an output, and you know that output is good, even though you didn't see what happened in the middle. And what that allows you to do is reduce the size of things because you don't necessarily have to store all of what's going on. You can kind of get the premise off of both of those, and things are right. You can reduce the overhead, and you get the secrecy that happens in between that. And you do that through using a little bit of elliptical curve math with other implementations of things that are allow you to do that. There is some really good explainers online that have kind of characterized that and like little like character overviews, like with a whiteboard style that explain it much better. Do you have an updated price target? Do you see RVN in the next bull run? So I haven't done an update to that sheet in a while. But the base target was that we had before is that it had to get back up to around that 25 to 50 cent target to really have some inertia behind it. So that's what I'd be looking at. $10 for the next bull run. I mean, who knows, man? Correct profile. Hey, Carter. What's up, son of a tech? Nice to see you here, buddy. Long-winded, my guy. Let me switch over to this. Let me bring up the let's see what we got here from here. I'm just going to show you. These are unedited. So there's nothing bad in them or anything. It's just hardware, my dudes. But I'm gonna take you guys through some of the stuff that's coming to your video waves here. Let me transition this over to the laptop real quick. All right, my dudes. So the first video I think here, this is like we started tearing apart one of the Hydro boxes. So the S19 Hydro is a new like Bitmain implementation, and they had one out of 4 4 petahash worth of deployment. This is one unit that had broken down, and you can see BBT Samantha there in the back. So this is the inside of one of the Hydro units. You can see it's 4 hash boards, and so it's not 3. And you can see how clean those plates are and how tight everything is in there. So that's a water loop that goes in over all the chips. And you can see that kind of piece there. And that other spot there in the box there is where the power supply goes. So you can see kind of a zoom in here. And we're going to have a much more deep dive on this. You can see here, let me zoom this through here. And this is kind of that front plate that has the water piece. And then you can see a good one to the left there. Now this power supply here uses that 4-prong connection. That is a full 3-phase connection. So that is not single phase, it is 3-phase. So it's a completely different power supply type. So you're not going to be, it requires an entirely other implementation. So we did get some of the tags on there for you guys could see some of the more detailed tags. And you can see the quality video. I brought the good camera out for this one so I could quickly get in some detail here. But that power supply, and here's the side of it. So you can see that it's I'll pause this video here. So 380, 415, 3-phase at 12 amps max. So this thing has a potential to go up to 9,000 watts of power. It's about 6,500 is where the max we've seen them at right now with some toying with it. But that 21.6, because remember, you have to take the power factor and times it by 1.73 because it's 3-phase. So if you just take the top of the output of 17 to 21.6 volts times 300 amp max, you have to times that again by 1.73. So, and the power supply is also water cooled. So that's another thing that people weren't really tracking, is that the actual power supply actually is water cooled too. So it's part of the water cool loop. Is the frame rates dropping for you guys? I don't know if the frame rate's dropping for you guys or not on that. So that's that particular one. Let's go through a couple more, and then I'm going to give it all away here. So this is the site up top. Oh, this is on the that's the water piece. So we have our trusty. This is on top of a large tower of the farm, so you can kind of see the farm over there. So that's the air cool side of the farm that we'll be going through, and I'll be narrating part of that. Let's see here. Let's kind of jump around here. Oh, there's a whole bunch of those that we did. This is inside the unit, and there you see BBT Todd in there. And part of this is just, this was actually on and actively running. And this was just on a startup on a new device. So you can kind of see real quick the implementation here running on one of them. So you could see that the Hydro was running and how many mega hashes in total, or giga hash. Let's see here. It gets over there. So each board was 50, doing 50 a piece, and there's 4 of them in there. So this one was at 201 as it was starting to spin up. And we had it as high as I want to say once the software is all done and it's spun up, these things actually spin all the way up to 260 terahash at around 6,000 watts, 6,200 watts. And in here was about 60 some odd decibels. So to give you an idea of just the thing there. Yeah, and here's the outside of that implementation. And again, this will all be on a video that's narrated and stuff. I'm just kind of giving you guys some insight to the build. And we get into everything. Like we got into like how the power was ran, lessons learned, all of that kind of stuff. Oh, so here you go. So this is part of the old GPU farm that they had going that are all down. Those are the Panda miners. So anybody looking for Panda miners? So what else we got here? And this is their current rig deployment that we're helping with, or we helped with on configuration stuff. But this mining rig is very interesting because you can see the way the power delivery is. It actually has slots that slide into with the twin 750 watt power supply. So this rig had 1,500 max total capacity. And those are BC 160 cards. And that's my terrible things that you would normally see not in a video because it's been cleaned up. Now there's a ton more content. So I was just whetting your guys' appetite on some of the stuff that we covered, and really thankful for them to really kind of let us come out there. Because a lot of this kind of stuff is sometimes protected under NDAs or whatever, but it's like, guys, we can't improve as a group unless we understand on certain implementations. And part of my goal out here with them was to just start giving some exposure to what's required if you start to scale up, because that's a larger farm, yes, but like as we all are participating, learning from each other is critical, and keeping this information free and open, I think, is critical. So us showing you guys on how like we configured things and like some of the considerations that we do with our own farm, I think are important to show and lead by example on that, for all of us to be better at this. And, you know, remember, and I've said this since the beginning of this channel in 2013 of showing you guys how to mine, is there are dips and valleys, and this is a long-term thing, but we are upholding the security of these networks. We genuinely are. That's what we're doing. And we're incentivized by the token to do that. So I think it's important to get leaner, get meaner on the design specs of some of this stuff, work with some of these vendors to get better products and better services, being very transparent with them when the fans and power supplies are junk, and give a good feedback loop to get better stuff out of it. And I don't think we get that until it's out in the open and people are starting to see it and they're like, hey, you know what, I could do that better than that other company, and maybe there could become a competitor. And then we get better products as a purchasing entity, right? Like we're purchasing it. So yeah, there's a ton of stuff coming up, my dudes. Tons of stuff. So hopefully I gave you guys some kind of insight of what's coming up. I saw some awesome, I see Red Panda here, Son of a Tech. Thank you, my dudes, for dropping in and saying hey on this video. Hopefully this has been good and informative. And again, we're going to keep our eyes pressed to what's going on with the Tornado Cash stuff. We're going to keep our eyes pressed on what's going on with the Ethereum stuff. There's some good videos coming out from us on those aspects. We also have one coming out on how to take custodial ownership of your coins. That's the third part series we were doing from the dollar cost averaging side. So if you do dollar cost average off an exchange, I think it's critical for all of us, Son of a Tech, Red Panda. People need to understand on how to move currency off of an exchange onto a hardware wallet. And I've talked to a couple of the different vendors. I've talked to Treasure. I've talked to Ledger that they need to send you guys out some stuff, our stuff. We're trying to get some units sent out to us. This is free education content on how to make sure people have a very comfortable understanding on how to move coins off of an exchange and become self-custodial of some of those coins and keep it safe. So that's the next part of us, because sometimes people aren't going to have the time to mine. They don't have the uptime. They don't have maybe the power that makes sense, but they still want to participate and they want to purchase the coins. So if people are purchasing coins, you have either to leave it on a custodial site like Coinbase or Bittrex or any of these other things, or you can move it off to your own wallet. And I think a new refreshed version of that for everybody is in order. And for that, there's vendors that provide those hardware wallets to channels. I know a lot of people get all uncomfortable when it's there like, oh, it's just you're shilling. No, man, we're trying to show you guys how to do things. And sometimes those companies provide their product. But I think as long as we keep it tried and true on how that implementation works, that's the point of it, right? So yes, we can go purchase all that stuff on behalf of the community, and we do a lot. We've been, here at BBT, I'm fortunate that I've been in this space long enough to be able to purchase the equipment versus having to have people send it to me. But I would never discourage anybody that has the opportunity that wants to teach people to reach out to these companies and say, hey man, send me your wares and I'll take a look at it and I'll give you my personal opinion of how it could be better or how it could be implemented. I think that is a very approachable, way of doing business. And that's the way, a lot of the channels and stuff that support this community have to survive in their full-time crypto. And, in a variable market where you have ups and downs, sometimes there are opportunities to help educate people on something. And then also we get compensated for that. So this video, not sponsored by anybody, of course, today, us, but I wanted to make sure this content was out there for you guys. And my dudes, Son of a Tech, Red Panda, we'll get on a call together at some point and maybe talk next steps on this stuff. So I'm going to catch